Ever get the feeling that the entire global market is kind of like holding its breath,
Yeah.
waiting for the other shoe to drop, you know?
Yeah, definitely.
Today's deep dive is all about how just one event, even something that seems small at first glance,
Right.
can set off this chain reaction
Yeah.
through, well, the whole system.
Yeah.
We're diving into the world of tech earnings, those surprise leaks that always seem to happen,
Yeah.
and why what goes down in one corner of the market, well, it doesn't stay there.
It's all connected, right? Like a giant web, I guess you could say.
Totally. And we saw this play out in a big way this week when a company called ASML kind of jumped the gun. They accidentally gave everyone a sneak peek at their earnings, like a whole day early.
Oops.
Now, you might be thinking, ASML, who are they? Why should I care?
It's not exactly a household name, right? I mean, it's not like Apple or Google, but they're actually like essential to this whole tech world we're talking about.
Okay, so tell me more.
Think of them as the master crafts people, I guess, for these crazy precise machines that are used to make computer chips.
Got it. So we're not even talking about the chips themselves. We're talking about the machines that make the chips.
Exactly. The most advanced chips, the ones that power everything, smartphones, AI, you name it.
Wow. Okay, so break that down for me a bit more. What makes these machines and ASML so special?
It's all about something called EUV lithography. You gotta imagine like a super high-tech printing press, right?
Okay.
But instead of ink, it uses ultraviolet light, extreme ultraviolet light to be exact, to etch these insanely intricate patterns onto silicon wafers.
Silicon wafers. Those are what, like the base of the chip?
Exactly. And those tiny patterns, those become the circuitry of the chip.
That is wild.
It is. It's incredibly complex, crazy expensive technology.
So ASML basically controls the supply of these cutting-edge chips. What happens when the company that makes them starts showing cracks? Because that's kind of what this whole earnings leak revealed.
Yeah. It wasn't great news, let's put it that way. Missed earnings, revenue way lower than everyone was expecting, not a good look.
And because they're so important to everything else in the industry.
Exactly. Their problems become everyone's problems. Imagine what if the only company that made the machines to build cars, like all cars, suddenly said, uh-oh, we're in trouble.
Everyone would panic.
Yeah, car companies, parts suppliers, everyone would feel that.
That's a lot of pressure. Billions and billions of dollars at stake.
Exactly. And what makes it even more interesting, right, is that this is all happening when there's this like huge buzz, all this hype about certain parts of tech.
AI, right.
Exactly. Companies like NVIDIA, the ones designing those powerful AI chips, their value has just skyrocketed.
NVIDIA's been on fire, absolutely crushing it in the market. But now, here comes ASML further down the line, and it's like, hold on, there might be a bottleneck in the whole chip-making process.
It's like a reality check for everyone caught up in the hype. Some areas of tech are booming, no doubt, but ASML is showing us that other parts of the industry, they might not be bouncing back so fast, not so uniformly.
It's a mixed bag.
Totally.
So how did the market react to this ASML news? If you were holding on to chip stocks, you probably weren't too happy.
I'd imagine not.
The PHLX Semiconductor Index, that's the one that tracks all the major chip companies, it took a 5% hit the day the news broke. That's a big deal for a single day.
Definitely significant.
And it wasn't just the chip sector, right? Tech is such a massive part of the market overall
It's huge.
that those losses, they had a ripple effect. They pulled down the whole tech sector and even impacted those major indices we watch, like the S&P 500.
Yeah, that's how interconnected it all is.
Just goes to show you, it really is all connected.
Oh, absolutely. I mean, this whole thing, it really drives that point home.
It's kind of wild when you really think about it. One company, a yeek about earnings, and it's not even like Apple or Google. It's this niche part of chip making.
And the whole market feels it.
Yeah, it's a global ripple effect for sure.
But, okay, here's where things get even more interesting. So tech stocks, they're taking a hit, right? But other parts of the market, they didn't freak out. They went in totally different directions. Like small cap stocks, those smaller companies, they kind of just hung in there.
Interesting.
And get this, those safe haven sectors, real estate, utilities, the places investors go when they're nervous,
Right, right.
they actually went up.
See, now that is fascinating. It shows you investors, we don't always react the way you'd expect. Like you said, real estate, utilities, those usually mean stability, right? People get scared. They want boring and predictable, especially with interest rates being so jumpy lately.
Totally. It's like everyone in tech is freaking out, and these investors are over here like, time for a cozy blanket and some hot cocoa.
Exactly. And the small caps holding steady, That tells me some people saw this tech dip as a buying opportunity. Those smaller companies, yeah, they're riskier, but there's also potential for huge growth if you catch the right wave. Riding the next wave. Gotta love it. But, okay, it wasn't all bad news on the earnings front this week. Tech might have been the drama queen.
Right.
But banks were having a party. Bank of America, Citigroup, Goldman Sachs, they all beat expectations, posted some really strong earnings.
Yeah, the finance sector, they had a good week, which is interesting considering, well, everything we just talked about with the economy.
For sure. So what's the story there? Why were banks doing so well when everyone else is freaking out about chip making?
A few reasons. One, trading revenue was huge for them. Remember all that volatility we talked about, the market swings, that chaos? That's opportunity for these banks. They've got these expert traders who can make money no matter which way the market goes.
So while some people were running for the hills, these banks were making money off the panic.
Pretty much. They're built for that kind of market. But it wasn't just trading. We're also seeing signs that investment banking is picking back up. That whole segment, it had slowed down, what with interest rates being so high, made doing deals really expensive.
Because when interest rates are high, it costs more to borrow money. So fewer mergers, fewer big company buyouts, all that stuff slows down. Right.
Exactly. But these earnings, they're hinting that maybe things are loosening up again, more deals, more activity. That's good news for everybody.
Okay, so good news potentially for the economy in general. But I got to ask, because this is the part that always throws me. Net interest income. Banks talk about that a lot, especially when interest rates are all over the place. What does that even mean?
It's simpler than it sounds. Imagine you're a bank, right? You lend money to people, mortgages, car loans, whatever, and you charge them interest. That's how you make money. But at the same time, the bank, they're paying interest too, to people who keep their money in savings accounts, CDs, that kind of thing.
Okay, got it.
So net interest income, it's the difference between what the bank makes from lending money versus what it has to pay out in interest.
So it's like their profit margin on lending.
Exactly. Now, when interest rates go up, you'd think banks would be thrilled, right? Charge more for loans, but they also got to pay more to their depositors, which can eat into those profits. These banks, they managed that balancing act well. Their net interest income stayed strong.
So that's a sign that they're in decent shape, even with all the economic uncertainty.
It's a good sign, for sure. It means they're probably going to be okay, even if things get bumpy.
Well, that's reassuring. Okay, so we've got banks weathering the storm, but then there's retail, always a wild card. This week it was Walgreens making headlines. They're closing a bunch of stores, like 1,200 stores.
That's a lot of stores.
Right. But here's the thing. Their stock went up after the announcement. It's like Wall Street was cheering them on for hitting the close button.
It's counterintuitive, right? But it just shows you the retail game, it's changing fast. Investors, they're looking at the big picture, the long game. They want to see companies adapt. Walgreens, they're streamlining. They want to cut costs, maybe focus on more profitable stuff like healthcare, which is booming.
So it's like a short-term loss, but potentially a big win in the long run.
Exactly. And the market's saying, yeah, we think this is the right move.
Makes sense. Got to adapt or die,
But
right?
the market is not kind to companies that stay stuck in the past.
For sure. But hey, it wasn't all store closures and doom and gloom in retail. Johnson & Johnson, they're doing pretty well for themselves. Their stock went up too after they reported, well, basically, that everyone's still buying their stuff.
The healthcare sector, that's one area where demand stays strong, even with all the economic uncertainty.
Yeah, makes sense. People always need their medicine. And speaking of uncertainty, let's talk airlines. United Airlines, they actually had a good week too. They came out with this optimistic forecast, even announced a share buyback program.
Interesting, right. The airline industry, they've had a rough time lately. Fuel costs, staffing shortages, it's been a lot. But United, they're showing us they can handle it.
Like they're flying high above the turbulence.
Exactly. Probably a combination of things, right? Keeping costs under control, being strategic about their routes, maybe adjusting prices.
Smart moves for sure. But okay, let's zoom out a bit, look at the whole economic landscape. It's a mixed bag out there, wouldn't you say?
Yeah, there are definitely some mixed signals, some uncertainty for sure.
The New York Fed, they put out their latest manufacturing report, and, well, it wasn't pretty. Manufacturing is slowing down, which always makes people nervous. But then they also said they're feeling optimistic about the future.
It's true, the economy, it's rarely ever a straight line, you know. It's more like trying to walk a tightrope while juggling, maybe blindfolded.
Sounds stressful.
It can be. But that's why we look at everything, all the signs, not just one thing. Manufacturing is just one piece of the puzzle. The service sector, remember, that includes everything from restaurants and shops to healthcare and tech that's been holding strong. And the New York Fed, they're thinking things might bounce back soon.
Fingers crossed on that one. So, as we're trying to read all these signs, all this data, what should we be watching out for in the coming weeks? What are the big things to keep an eye on?
2 words: retail sales and jobless claims.
Okay, break it down for me.
Retail sales, that tells us what consumers are doing. Are they spending money, feeling good about the future, or are they tightening their belts? If those numbers are strong, that's a really good indicator for the economy as a whole.
Makes sense. People spending money, that's what keeps things moving.
Exactly. Then there's jobless claims. That basically tells us how many people are filing for unemployment. If those numbers are low, or even better, going down, that means the job market is strong, which is crucial for, well, everything.
Right? People need jobs to, have money to spend. It's all connected.
Exactly.
But it's not just about what's happening here, right? We're talking about a global economy, so what happens over there matters to us over here.
Big time. What happens in one corner of the world, it creates ripples everywhere. Like China, for example. They recently released some of their economic data, and it wasn't great. Imports, exports, it was all lower than expected.
Not great, no.
And that's got everyone a little worried. China's a huge part of the global economy, so if they slow down, well, we all feel it eventually.
Exactly. When China sneezes, the rest of the world catches a cold.
That's one way to put it. But hey, there's some good news out there, too. Canada, they're one of our biggest trading partners, and their inflation numbers just came in way lower than expected.
Oh, really? So things might be calming down on that front.
That's what it's looking like. Inflation's been a global headache, so to see it cooling off even a little, that's a good sign. It'll be interesting to see what the European Central Bank does with that information.
Yeah, all eyes are on them and every other central bank out there, for that matter. They've got some tough decisions to make about interest rates.
For sure. They've got to find that balance, right? Keep inflation in check, but not, slam the brakes on the economy either. It's a delicate dance.
It's a good way to put it. It's a lot to take in, for sure. But hey, that's why we do these deep dives. We break it all down, try to make sense of it all.
Exactly. Knowledge is power, right?
Absolutely. And speaking of knowledge, we've covered a lot of ground here today. We talked about surprise earnings leaks, the wild world of chip making, banks doing their thing, and even a little bit about the global economy. But before we wrap up, any final thoughts for our listeners out there? What's the one big takeaway you want them to remember from all of this?
I think the biggest takeaway, really the theme that's woven through everything we've talked about today, is that it's all connected. What happens in one sector, one company, even one country, it has the potential to impact everyone else. So my advice, pay attention. Stay informed. The more you understand about how these global forces work, the better prepared you'll be to navigate whatever comes next.
Couldn't have said it better myself. It's all about being informed, being aware, and maybe having a little bit of that hot cocoa on hand just in case things get bumpy. Thanks for joining us on this deep dive into the ever-evolving, always fascinating world of finance and the global economy. Until next time.